Over the last week or so, we were specifically looking at how a lot of the hedge funds are positioned off sides and not allocated into the equity markets, which could trigger a short squeeze specifically for NASDAQ and the S&P 500. We're starting to see that come into fruition. So in today's show, we'll discuss what this means for crypto. Will crypto follow suit, and what are the levels that need to be cleared? Is there going to be one more opportunity to potentially see a high low before you do actually get a major breakout? Smash the like button, hit the bell notification, and subscribe to the channel. Let's get going. We also have to discuss when and if we do actually see that big breakout into new all-time highs for Bitcoin and crypto. How long will it last, right? That's another big important thing that we need to discuss, because we are in the end phase of the crypto cycle where we expect volatility to pick up and big wild swings in both directions. If we do look on the daily time frame over here, you're getting a short-term pullback, at least within the top 100 coins over there. Weeklies are still relatively down across the board, other than some coins like 𝗓𝗍, which has put in a pretty big move. But for the most part, Bitcoin has still been the biggest and best play, because I'll show you in today's show as well how Bitcoin dominance has actually hit 70% on a different chart. I'll show you what that looks like and if that trend is going to continue. So part of the short squeeze analysis, what we can do is we can also have a look at the NASDAQ monthly returns. This is over the years since 2009, which basically lines it up exactly within that 18.6-year real estate cycle, which every now and then we've touched on, which is ushering in the end phase of the cycle for both equities and crypto and real estate, right? It's all one big trade over there. And if you look over here, things could heat up in July, because historically speaking, for the NASDAQ, which Bitcoin trades very, very similarly to, July's have been pretty big moves, right? Huge moves over there. Remember, seasonality though, August, September is the most likely time to see pullbacks within the stock market. So some interesting evidence over there. Another thing that you can have a look at over here on the S&P 500, and it's going to be great in the short term, but very, very, very important warning signal for the longer term, which I'm going to highlight today. We touched on that. I think it was yesterday we spoke specifically about those high time frame weekly and 2-weekly bearish divergences, specifically on Bitcoin over there. And if you have a look over here at the S&P 500 approaching those all-time highs, and this is where we said a lot of those hedge funds that are offsides in their positioning will be forced to pretty much chase the pump. Now, how high could that pump go? Now, this is in the short to medium term. If you do start to see this spiking towards the upside, well, that drives it up to approximately about 7 to 10%, depending on when it does get to those regions. And you can see you're going to meet this at least pivot level over here with the upsloping trend line acting as temporary resistance. So there is going to be some significance when this comes into play. Remember, expect that a lot of those hedge funds are going to be chasing price over here, buying into FOMO, which is oftentimes the most dangerous time to be allocating into the market. But what's more important about that is, of course, if we do see that move towards the upside, well, you have liquidity just above for Bitcoin at $109,000 as well, which means you're probably going to continue the short squeeze in Bitcoin and see higher prices. But you have to consider the high time frame. Now, the high time frame for the stock market is theoretically very similar to Bitcoin's high time frames. This is the monthly for the stock market. Bitcoin, we specifically looked at yesterday, the weekly and 2-weekly with the bearish divergences, which, remember, with the bearish divergence, you could still see 3 drives, meaning another higher price target, which could take you to about $120,000 to $130,000. And then we need to see what the RSI is made of, as well as the other momentum oscillators. Are they invalidating that bearish divergence, or are they rejecting from the resistance lines, right? Now, on the stock market monthly chart, you have a very, very, very similar picture over here, right? Bearish divergence, you have your highs, RSI tests, that trend line comes all the way down. RSI tests the trend line over here, rejecting, coming down. And this is over a long time frame. This is taken all the way from 2018. So you got a very, very, very strong candle that occurred over there in the, what month was that? That wasn't, so not June, and it was not May, it was April, the April low. Strong candle moving towards the upside, and a lot of FOMO buys coming in. So we'll assess to see how that reacts into that zone. So using the daily time frame as some potential target areas where you could meet some short-term resistance. Well, the levels that at least I'm looking at is around that 6,700 to 6,800, and then we'll reevaluate. That's another 10% up for specifically the stock market. And then we'll see where's the RSI relative to that monthly downsloping trend line. while the price is actually testing that $6,700 to $6,800 region. Now, if you do get that short squeeze for Bitcoin following along with the NASDAQ, which has shown to have a very, very, very strong July, well, then you would expect that that could break into the party zone. And very similar, right? You're looking at that bearish divergence, mainly focusing on the white line over there. If you can break this orange line, that's probably exactly the point where Bitcoin does break into new all-time high. So new all-time high price should cross the orange line that acted as resistance over there. That should breach it through, and that's where you're going to get your acceleration into the next target zone, which I've outlined over here. Depending on when it hits, it's going to be between that $120,000 and $130,000 region, which is why I posed the question to you. What do you think happens next? Go through to the poll section over here, and you can vote. 691 of you have already voted. Go and vote over there. Your best guess price target for the Bitcoin ultimate top end of cycle target. Top's already in. 15% of you believe that. 120 to 130,000. That's actually where I put my vote. That's 40% of you. 150 to 160,000 dollar Bitcoin price for the top. 24% of you, and then 21% of you believe we're going way above. Now, I'm in the camp that I'd rather leave a little bit early than risk it, right? I like to leave the party just before the chaos, just before the fights break out, just before there's drunk people puking everywhere. And I think that this is the sweet spot, which means one more pump, right? One more pump. That's kind of what I'm looking at personally. You do you. I'll evaluate what happens with the RSI when it hits that level over there. If it does get into that around that 70 region, I'll reassess. Depending on how it gets into that region, I might change those targets. But for now, that's still the plan. It's been the plan for a long time. That is your 1.618 fib extension as well, which is, of course, coming into that $130,000 region. So this is the other chart that we looked at yesterday, right? That weekly bearish divergence is still there with the red dot confirmed. We said that the 2-week scale is a vitally important chart because it did have the presence of a red dot, which historically, when you get the red dot on the market cipher B indicator, it usually does lead into significant pullbacks. Now, we have a couple of days left to go, right? It's very, very, very important that if prices, of course, going to continue higher, well, we need to clear the range high. And I've marked the range high as the prior 2-week candle high. I'll show you on a different chart what that looks like as we come off low volatility. Let's go straight to it, right? There's your prior 2-week high. If Bitcoin could trade and close any high time frame candles above $110,651, well, then you've taken out the prior 2-week candle high. Right now, you have an inside bar candle in between the low and the high of the previous 2-week candle. And I want to remind you that the prior 2-week candles have taken out each of the lows with massive rallies in between, right? This one got very, very, very exciting. Almost took out the prior 2-week high. And then, of course, look what happened. It came all the way back down to the bottom to 98,225, which shows a lot of volatility. There's massive volatility within the market. But unbelievably, there's still, on the high time frames, contraction, right? There's contraction in terms of forming tighter and tighter and tighter ranges, which shows that eventually you're going to break out. And this is your range, is between 98,225 and the high is there at 110,651. And if you can get above last or the previous 2-week candle high, we have 10 days and 18 hours left to go. So it's going to be a big 2 weeks, right? We still have a lot of time left to go. The rest of this week and the whole of next week is going to be vitally important in determining the next trending move. Why do I say the next trending move? Because on the 3-day, the 2-day, and on the daily time frame, you have massive contraction of volatility as shown by the Bollinger Band with percentile. This tells you that a big move is brewing. Anytime that you see this indicator hovering under that 10 percentile mark, which is the green line over there, anytime that it consolidates into that region, it's like a spring that's getting squeezed in tighter and tighter and tighter, and eventually it's going to be released. And when it gets released, remember, it's a direction neutral indicator. It doesn't tell you up or down, which means you have to use confluent factors like low time frame trends to try and get some sort of a trigger plan for where price may go next. So your highly confident trigger plan would be this. If you see a high time frame candle close above the 2-week high, 110,651, then ultimately the expectation would be we move into the party zone and we're heading up to about $130,000 in pretty quick succession. Alternatively, if you take out the prior 2-week low at 98,225, you do have to look to some lower targets. We don't need to focus on right now. The closest target is $95,000, and then we reevaluate what happens after that if that does take place. We have the global M2 money supply, which has been a 12-week leading indicator, not necessarily expecting that price will match it in terms of magnitude, meaning the black line over here, which is showing between $160,000 and $180,000 over there. It doesn't mean that Bitcoin is going to follow in magnitude and reach that. What's important when you look at this M2 money supply is you want to focus on the direction. And right now, the direction of the M2 money supply is still rising towards the upside, which means new liquidity coming into the market. And therefore, at least from an institutional perspective, there's still a chance for Bitcoin to carry on higher. So this is probably going to be one of the biggest mistakes that many people do make, is expecting that wherever the M2 money supply does top out, that's going to be the exact price target that Bitcoin is going to go to, because they're overlaying it literally on TradingView. You can delay the M2 money supply by 12 weeks. If you go into the settings, you can say delay by, or delay it by 12 weeks, and then you'll see Bitcoin is following very, very, very similar. So this is the end phase of the cycle where things get really, really exciting, which means that you do want to have your wits about you. You want to focus. You want to keep your finger on the pulse. And we are currently situated exactly. We should keep this chart on because it's very, very relevant. We situate about 960 days into the crypto cycle. The prior two cycles lasted above 1,000 days, which would therefore suggest that we still have at least 2 or 3 months left. Now, it would be very unlikely that price would top out early, especially at the end of an 18.6-year cycle, which is what we spoke about. And that's part of the reason why we're seeing equities go ballistic. There's a lot of equities. Look at that. NVIDIA as well. Let's go back to that. Pretty much pushing all-time highs right now. So the breakouts are happening. Tesla still struggling a little bit, rejected over there, but it's probably going to reaccumulate, as mentioned previously, between the 200 moving average at just under $300 and pretty much where it is at right now. You can probably get a little bit more precise with some fib levels, and let's just see relative to the 0.382, how does that line up? Perfect. Look at that. Support, right? Support on the orange line, 0.382. The 0.382 fib is always an important Fibonacci level to look at in trending moves. If bulls are in control, you expect that level to be defended. And in the worst case scenario, price may come down to the 50% level, which is at 315 for Tesla. So if you start to break this trend line over here, Tesla will probably also start to rapidly appreciate towards the range highs at 411. And you're seeing it across the board. A lot of the stocks are starting to really, really, really grind and push towards new highs over here. All right, let's continue. So that is the end phase of the cycle that we're looking at over there in terms of Bitcoin, despite the fact that we have a bear moon. Remember, this is still relevant. I'll show you why in a minute. As long as price, though, however, consolidates and holds above those key moving averages, the 9, the 18, and the 50, which is now crossed back towards the upside. We have the 9 and the 18 golden cross again. And if those can start to recapture that 50, that is your area of strength, even if you do have a bear moon. The bear moon is just, a little bit of a warning in the background, and you are coming into resistance. So we'll take it each day as it comes. Remember, I did mention to you guys previously that we're looking at the buy over here with the swing failure pattern swinging below $100,000. That was the buy opportunity, closes above. So now I told anyone that missed out on that, you kind of just have to wait. At the moment, there's not much you can do. You have to wait for pullbacks. There could be another throwback. I'll show you on the next chart where that would be. But if you don't get the pullback, then you're going to have to wait for the breakout and then the retest into those highs over there. That's going to be the next best opportunity. This is, in my opinion, definitely not a place to be allocating into the market if you're not already in. You can see the trends are still down. You have the green to the red over here. So downtrend, break of structure, lower lows, lower highs on the 12-hour time frame. And right now you're coming exactly into that key resistance spot. Now it always feels most bullish at resistance. Just to be clear, the resistance level that we outlined is not only the downsloping trend line, but the 0.786 to the 0.886 fib level. And that is between 108,000 and 109,000. That's an important area. Now, if you do get the pullback, this is going to be the areas that you're going to be looking at. If you do get the pullback, I'd be targeting into this fair value gap over here, which means Bitcoin could pull down to about 103,500. Watch for the consolidation or support into that region. That becomes the high low. We did outline this. We said that we think that if price does happen to pull back, bulls are going to step in and attempt to put in the high low, especially now that FOMO will be kicking into the market. And I told you that as well. I said that as price moves into the zone, and I already called that when we're down here, as price moves into the zone, expect that FOMO is going to come into the market. And I think that's exactly what you're seeing. You are seeing a bit of FOMO. Now, it does create a tricky environment because if the NASDAQ starts to break out and move parabolically, then there is a chance that you just breach through. And if you do breach through again, that's your next best opportunity. So the two areas of interest, right? One would be over here into the fair value gap. That gives you a price point of 103,500. The second area of interest, you need to wait for the break, flip the trends back up, create your first higher high. Remember, relative to this, you have your high, you have your lower high, create your first higher high, and then you probably get a throwback into about $109,000 for your next high low. We'll reevaluate once price confirms a higher high, then we can use our fib levels to map out the next target. But here you're in the middle of no man's land, right? As it currently stands, exactly where Bitcoin is right now. Risk to reward, it doesn't make sense to take a long here. In fact, it makes much more sense to start to look for weakness on the low time frames and to scale into a short trade with your stop loss above those highs. But keep in mind that you would be shorting against the stock market, right? If you are short on Bitcoin, you're shorting against the stock market, which is trading right around all-time highs, which means that you could become part of that liquidity. But if it's a calculated bet and it's part of a hedge against maybe spot positions, it makes sense. Now, this will go way over the head of anybody that's new over here, so pretty much just ignore that part. Don't short the market unless you're a highly skilled trader and you know what you're doing in terms of insurance or hedge against your other positions. Because most short traders just get wrecked over time and the markets generally float towards the upside. In my opinion, there's very, very, very few times that I would short the market. The main time that I would short the market is at the end of a bull market when you have a confirmed breakdown of the weekly time frame on that first lower high, which last cycle I did that publicly on YouTube, $48,000 down to sub $20,000, one short trade, that's it. Okay, cool. Anyway, let's move on. Let's move on over here. So that's what we're looking at over there for Bitcoin. If you do want to trade this, right? If you do want to take any of these trades that I've outlined or trade plans, remember, sign up over here to the World War of Whales trading competition. It begins in 4 days, 55 minutes. But you can start getting registered if you do want to join into my team. There is a link in the description below. So go to the link below. There it is. If you go to the top over here, Blowfin, one of my favorite non-KYC exchanges. Remember, this exchange is super safe as well. They use Fireblocks, which is an external security party that will basically protect the capital. So you can't get trading of users' funds, which is what happened with FTX, which led to the massive bear market low of 2021. Right. So if you do want to use that, use the link there. You get a sign-up bonus, $4.2 million up for grabs. They also giving you, I think, prizes like Cybertrucks, Omega watches, all sorts of different things over there. Okay. Also, let's go to this. So we spoke about this. Coming into the 786 and 886 fib level is theoretically where you expect a rejection to take place, which just so happens to line up exactly with the downsloping trend line with a confirmed, downtrend that's forming on the 12-hour. You can literally see it over there. I even use the indicator to make it completely objective. So it's not my opinion against yours. It's fact on the chart, lower lows and lower highs. You expect that this would be your first confirmed lower high that would form over here at the 786. And you do also have the, of course, 7-day daily exchange volume, which is beginning to roll over. So if the bear moon is going to hold true, this would be a logical place that price would reject. If we are going to go parabolic, well, then you expect you should break that, and then you're going to look for throwback scenarios following the breakout. Okay, this is all still for both Bitcoin and the total cryptocurrency market cap. You are theoretically still forming a massive bull flag. Okay, you can see it over there, massive bull flag. It's just a question of, do you come down one more time or do you break out? Now, if you do come down one more time for the total cryptocurrency market cap, you're coming into resistance over here. That is your rejective zone. The one area of interest that you look at is, of course, the 0.618 to 65 fib level. That is the 3.3 trillion target. And then we said if you start to take out that high over there, probably that's confirmation of the breakout, 3.36 trillion. So those are some of the important areas of interest for at least the total cryptocurrency market cap. Let's quickly see these. So you have come into key support, fair value gap, started to bounce on total 2, total 3, looks a little bit worse for where, very, very, very weak over here. Unlike the total cryptocurrency market cap, you can't really call this much of a bull flag, right? You can't call this much of a bull flag. Like you can't have a flag that's literally as long as the pole. Here's your pole, here's your flag. So this one looks a little bit weaker. Others also, same story, looks a bit weaker, but the good news for this is at least it is testing and somewhat holding that trend line. We'll make this a bit bigger for you. Let's go 4 points over there. So you are somewhat holding that little bit of a trend line over there. So there is some hope that you recover and reclaim some key levels. What are the levels that you're looking at for total 3, which is your altcoin sector, to get into a position of strength? Well, you needed to get above 250 billion. Previously, we had the blue line to say we need to recover that. You didn't. You can see rejected there. So now we can reduce this level, and we can say that's the level to reclaim, 250 billion. Until you get above there, you have to assume that this is a downtrend, and it's going to continue to be a downtrend. Very, very, very important. All right. Total liquidations, a little bit of a short squeeze in crypto, but not as bad as the stock market. Stock market will be seeing much more short covering over there, short traders getting stopped out, liquidating positions, and we'll see if that follows through with crypto. 144.37 million. The Bitcoin dominance really sawing 65%. I told you though, it's 70%. How is it 70%? It's 70% if you remove these stable coins. So as you can see over here from Benjamin Cowan, excluding stable coins, Bitcoin dominance has now actually hit 70%. What's important to understand about this is even if you look at this chart of his, you can see this is going to be support, 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 resistance, 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 which means theoretically between the 70 and 80%, excluding stable coins, is a major resistance zone for the Bitcoin dominance. And I'm sure all the altcoin bros are going to be hoping that this rejects over here. You're coming into the top of that parallel channel, into the resistance region over here where you saw your prior rejections. We'll reevaluate. I've always said that I think it's best before allocating heavy into altcoins to wait for an actual confirmed breakdown, which would look like lower lows and lower highs, at least 3 consecutive lower lows and lower highs, and you should start to see the breakdown over there. So Bitcoin dominance still rising. This is what you're looking for as well on the USDT, which is the inverse of what we're seeing on Bitcoin and the total crypto market cap, which is putting in, remember, bull flags, right? They're putting in bull flags. This is putting in a bear flag over here, which means you want to see follow through very, very, very soon. Now, if this flag doesn't break down soon, but continues, similar to what I mentioned to you on total 2 and 3, it kind of becomes invalidated. Then you can't consider this a bear flag anymore because you can't have a flag that's literally longer than the entirety of the pole, which means that you definitely want to see this reject with the moving averages or the EMAs rolling over very, very, very soon and starting to take out those lows. Now, I told you that the main level to clear to get full confirmation is a breakdown below 4.5%. So you can go on some of the low time frames and probably get a little bit more of an early lead. I would say that the next major area for an early target is going to be, or at least an early trigger plan if you break below 4.6%. That's going to be an important area. That's your last high low that occurred on the 4-hour time frame. Okay, but because there's been a lot of chop in the market, personally, I prefer to just keep it on the dailies and do most of the decision making for spot trading on the daily time frame. Okay, ETH theoretically coming into resistance. You're seeing a lot of hype about ETH as well right now on X or Twitter. You're seeing a lot of people saying ETH summer, ETH summer. You'll see that hashtag being used over and over, and that's because ETH is up almost 3% today. But it is coming into resistance, right? This is a pretty key area. Now, if ETH can start to close back above here, the yellow box, which is your order block that led to the breakdown, that becomes a valuable area to reclaim. It's a good area to reclaim. Then you can say that, similar to Bitcoin, maybe you just had a bit of a swing failure pattern below some of these lows over here, which would be there at about 2,386, and you've reclaimed that. But similar to Bitcoin as well, if we go into the 12-hour time frame, I still think that your best bet is to probably look for buy the dip opportunity into the fair value gap over there, which would be, so if you did miss out, you're going to be targeting into this region over here, which is ultimately 2,331. Let's change the color over there, not to confuse you. So there it is, into the midline of that, 2,331. That's going to be the area of interest. So if you see some sort of a rejection, pullback, demand that comes in, you have a clear invalidation underneath there, and then you can trade it higher. Alternatively, you need to wait for proper breakouts throwbacks into support, and then you have a good opportunity to get in. So, if you're not in any positions and you think the market's going to break out like crazy, well, these are your best bets. Bitcoin, we covered on this chart over here. Let's just go back to that. Let's go back to Bitcoin to just remind you on the 12-hour. There it is, 103,500. ETH is 2,300. Those are the areas of interest. Okay, those are the areas of interest. So let me know in the comments what else you guys want to have a look at. These are the multiple scenarios. I understand that for anyone that's new, it's probably a little bit confusing, up, down, sideways, left, right, and all around. Well, that is trading. So welcome to the market. Okay, Solana. Let's go to Solana. Let's see what's happening over there. Okay, so most of these coins, all you have to do is map out, I'll go on the 12-hour chart and map out the fair value gaps. Those become the most likely areas of interest for a higher low, for the next demand area before probably breaking out, which is going to be this. There it is. That's going to be the area of interest, targeting towards the midline. What we'll do is we'll just quickly throw in a midline level over there. Let's put it in white and let's make it solid. There it is. Okay, so that means Solana down to about 138. Okay, Solana to 138. That's your opportunity over there. Solana 138, you're looking at something like that. And then you can target high prices. Okay, WIF. Yes, we're going to bring out WIF. I do read the comments. I saw someone said before, please, can you just do WIF? That was before the show. Before the show started, I've been asking for weeks, please do WIF. So let's go to WIF. Okay, WIF on Binance. Here it is. All right, this one theoretically, in terms of the 12-hour fair value gap, it's in the fair value gap right now. Let's get more perspective by looking at the daily timeframes. So in terms of the daily, it did come into resistance. You can see rejected from there. Look at that, prior support. Unbelievable that that's a retest into underside resistance. So you really, really, really want to see this thing moving from here. You did come into some key supports where you got your first reaction off of. So now zooming into the low timeframes like the 12-hour, I would look at a couple of other areas of interest. Let's just see how this trend line lines up maybe on these other time frames. Maybe we can get a bit more precise. Okay, so that trend fits beautifully over there. If you can get above that trend line, that's going to be looking good for at least a breakout of the 4-hour downtrend, with this having been a pretty key level. Going on to the 12-hour to find our fair value gap. Here's your fair value gap, which you've directly come into right now. Therefore, there is opportunity over here. So that is your buy the dip, right? You're in it right now. That is your buy the dip. You have a clear invalidation. Clear invalidation. Does this trade make sense from a risk to reward perspective? You can start to scale in over here, but obviously the closer you can get to invalidation, the better. Hard stop below those lows, targeting to the range high. That gives you a beautiful 3-to-1 risk to reward level, where the prior resistance was set in at about $1.20. And if you can break above this and flip this into support, then of course, sky's the limit. Maybe USDT dominance breaks down. There's your hopium chart. If this breaks down in a big way and everything goes parabolic, you have a beautiful, beautiful trade on your hands. So we've mapped out the levels. Let's go on the hourly to get a couple more things and a little bit more specific on the trade. Let's quickly use our fibs. Okay, 50% level. Where does that 50% level line up? Look at that confluence and, beautiful, beautiful confluence with the 50% of the fair value gap, which is the equilibrium of where you expect price to go. So from low to high, your fib comes in at 76 cents. So the person that asked for WIF is really getting their money's worth here. How much money did you pay for the show? Zero. All I ask is for your guys' like, right? Just smash the like button. Also, let me know in the comments if you do enjoy the shows. All right, so 50% levels, one area of interest. Let's quickly throw in the golden pocket. If it really gets deep into the lower zones over here, that's going to be about 72, 73. So 72, 73. These, I like this zone over here. So I'm going to remove the fair value gap pink box. And then I would highlight this. This is kind of where I'd want to do my bidding. Okay, into that block over there. That's where I'd want to do my bidding. Into the pink zone over here. Really, really nice. If you can just do like one more little drop. But also you have to watch Bitcoin. It's really important what Bitcoin does. Because if Bitcoin goes down to that fair value gap, I think it's like 5 or 6% down, ETH 5 or 6% down, then you know this could do something like that and possibly even double bottom. So have a strategy, have a plan. You know, I would just be watching manually what happens as it comes into this region. Tight stop loss underneath over here. If you want a little bit of a tighter stop, you can go under those lows. All right. Very, very, very nice. I think this is a nice setup over here. It is a downtrend. It is resistance. But if bulls are going to take control and that can break it, you know, now you have a risk-free trade already in early, and who knows how much things run after that point. Okay, so nice trade over there. I'll just quickly re-highlight and line things up. Let's move the entry a little bit further down on this to the midline. Okay, so I would say that would be your average entry. That would be the golden trade with the average entry. I've clicked on it. Let's say okay, the stats are on. So entry is 0.746 average entry, because you'd enter at 76.5, enter again at 73.5, which takes your average entry to 0.74 and targeting up to just over $1. Maybe you take a bit of profit at $1 because it's a psychological level, and then leave the rest to run to 120. Stop loss at 625. Okay. All right, cool. Let's go back onto the daily timeframes over here. So we got that one in. Cool. If this fails over here and rolls over, then it's terrible. Maybe you wanted a bit of a higher time frame perspective. 41 cents becomes possible, possibly even breaking below that. But that's your next major support. All right, 𝗬𝗍. Okay, 𝗬𝗍𝗍𝗍𝗍. So you can see a lot of them found support into those fair value gaps. They're still in downtrends. You can't deny it. Those are downtrends. Look at that, lower lows and lower highs. We've mapped out from the low to the high, the 50% level. You want to get above that to show signs of strength, which means 𝗬𝗍 needs to reclaim $3. Very, very, very similar to the rest of the coins. Probably on the 12-hour, we can find a fair value gap, which theoretically you're coming directly into right now, back into demand. So what I'm going to do is just remove that pink box to not confuse us. And we'll have a look at this. There it is. You're testing that fair value gap right now. Your equilibrium is $2.65. So therefore, you are longing a downtrend. I just want to be clear. In the low time frame, you'd be longing a downtrend. There's quite clearly lower lows and lower highs, but the fair value gaps are oftentimes very reliable, which still makes it risk to reward a decent trade opportunity. And trading back to the highs, 3.78 to 1 risk to reward ratio. That is entry 265, stop loss $2.26. Take profits along the way, but main one $4.13. Okay. All right, let's go back to PopCat. PopCat. Well, not that we were there, but let's go to it. That is one of the requests. Let's go to the one on Bybit. So PopCat also already, you can see on the 12-hour, it's come deep into that fair value gap. This is like a, hey, this thing must bounce now, soon. Quickly getting some perspective on the daily time frame. Obviously had the huge move up. What we don't want, which I just want to open everyone's mind to multiple different scenarios, right? If Bitcoin does reject from that super fib level, the 886 and 786 fib level, if it does reject over there and start to come down hard and take out the previous 2-week low, then the thing's in trouble, right? Then you're talking about those bearish divergences on the weekly, 2-week, possibly playing out for Bitcoin. And then this would look like, you know, a complacency bounce, a very, very weak complacency bounce. And this could easily just bleed much lower. So it's really like an important zone and a do or die situation for a lot of these coins. TA wise, you know, I can't give you much on the daily. The main area of interest, I would say, for the daily is I don't like any of it really. Like probably like that. That's going to be the key support at about 20 cents. 20 cents. That's what it is. Downtrend, lower lows, lower highs. The only reason that there's no reason to long this, in my opinion, but the only reason you would long this now is if you assume that things like WIF are coming into their fair value gaps, they're going to hold it, bounce, and Bitcoin's going to break out and follow the NASDAQ to new all-time highs, then cool. Maybe, yes, you consider this a fair value gap, but it's already broken through the equilibrium. It's coming deep into this. You can see it's already lost the whole fair value gap. So I don't really enjoy that. Therefore, I'd prefer to see more strength from this, which the first sign of strength would be reclaiming these breakdown levels at 31, or not a breakdown level, but the last lower high, 31 cents. need to see a trade above there. If you can print a high low, I would prefer to see more strength than trying to catch that fair value gap over there, which would look something like this. Low, somewhere here, form a high low, build a bit more strength and a base over here, and then you can get a different fair value gap at a later date. That's at least my opinion. Okay, what is your opinion though? Let me know. I want to know your opinion as well. All right, cool guys. Another thing, before we do continue, I just want to mention as well, security. I'm in another crypto group and they sent a phishing attack to someone that I know, and the guy got drained big bucks. Luckily, it wasn't his main laptop, but it was his work laptop, which did have one MetaMask wallet on, and they absolutely cleaned him on that MetaMask wallet. You oftentimes need to, if you have a Gmail account, you need to go into the original email. There's 3 dots on the top. You can click the 3 dots on the email, and then you can go see original sender. So sometimes they can mask it to make it look like it's a crypto project or something like that, or some bank that you're dealing with, and you click on the wrong link, and immediately malware is on your computer, and then they can begin the draining process. So please be careful. One way that you can protect against that, remember, is with a VPN. How does it protect you? It changes your IP address. It gives encryption. It has ad blocking as well, an additional benefit. We are partnered with NordVPN. We thought they're the best on the market. That's why we partnered with them. They're giving you currently 74% off as a banter deal. If you do want that, the link is in the description below. As opposed to having to check the 3 dots on an email from some dodge sender, this will pop up automatically and say, this email doesn't look secure. Because I'm in crypto, trust me, I get sent these emails all the time. And NordVPN usually pops up with that notification, and it says, this looks like a dangerous email. Are you sure you want to open it? And if it even says that, I just click delete. Okay, I just click delete immediately. So if you want to protect yourself, it works out to like less than $3 a month. It's very, very, very cheap for what could save you thousands or tens of thousands or hundreds of thousands of dollars. Is like a no-brainer in my opinion. All right. What else? What else have we got, guys? What else? 𝗬. Yeah, let's have a look at 𝗬. Let's see what 𝗬 is doing under the AI sector. 𝗬, traditionally one of the stronger coins. Same thing coming into the fair value gap. It looks like we have some confluence with the mid-range, which is not bad. So we got the mid-range over here. Let's see, just from the recent low to the recent high, it's a little bit actually off, So let's just map that out. But we are attempting to reclaim that. So that's your 50% level of that range. This is the equivalent of your range quarterly. Why? Because here you have your high. So there you have your 75% level, 50% level, 25% level, and your 0 line, which is the range low. So if you divide these things up into quarters, first quarter, second quarter, third quarter, fourth quarter, which means you're in the discount zone, right? Discount zone, premium zone. You want to buy into the discount zone as low to the bottom as possible, and you want to sell in the premium zone. Since this had a big move up, if this is going to be a high low, then maybe it's a decent spot. So looking to reclaim the 50% of that level, let's go back onto the 12-hour. You're in the fair value gap, similar to all the other coins. I just want to be clear. The trend is your friend till the end of the trend, and the trend is down. The trend is down. Lower lows and lower highs is exactly what's happening over here. But, for the itchy fingers out there, there is your fair value gap. So maybe you're going to start to print a little bit of a high low over here. If your bias is that the market is going to move strong, then this is exactly where you expect that next high low to form, which means your trade setup would look like this. There's your entry. There is your stop loss underneath those lows, because if you take out those lows, you're moving probably back down to the range low. You can trade this back to the top 3-to-1, just like a lot of the other coins out there. 3-to-1 risk to reward ratio. Those are the trade opportunities that you have. So I've given you guys a lot of trades. Remember, if you do want more than this, in whale room is usually where we drop it. This is yesterday I outlined the same thing, what I just shared with you guys on the show. Daily exchange volume coming down, the bearish divergences. This is just to quickly make it easy and highlight. This is 2021. Very similar. This is 2021. This is using the market cipher B indicator now, and this is 2021. All right. There's your range. Ultimately, you want to clear that range. Whatever side clears on that range is the most likely next directional trending move since we are coming off of, pretty low volatility. Here it is, 2-day time frame. The Bollinger Band with percentiles heavily contracted down. It shows it wants to put in a big move. Okay, it wants to put in a big move. Obviously, our more optimistic side would like to believe we're going to break the top of the trading range off of this bull flag on Bitcoin. This is a bull flag. There you go. And the measured move of that bull flag does actually take you pretty much straight into the target level, which is 120,000. Let's actually quickly work that out. So we'll go, I like to go with a bit more of a conservative bull flag poll, but look at that. Perfect. 130K. Okay, 130K. And then we can reevaluate what happens if you get to 130K. If you get to 130K and you just consolidate there, even more bullish, cool. Then we can start to change the targets. Let's see your targets. So 40% of you, even though it hasn't changed much, even though like twice the amount of people have voted over here, then we can start to raise that, maybe 150, maybe 160, but let's just go one step at a time. We're not here to be Nostradamus and try and predict 400 years ahead. Let's just predict, one day at a time. That's why I do the show every day. We don't need to predict hundreds of years ahead. So that is it from me, folks. Thank you so much for joining. I gave you a lot of trades. If you appreciate that, smash the like button. If you want more, jump into Whale Room. I'll see you all on the next one, and I hope you have a great day. Cheers for now.